Kyle, Alex, Niesh, we're all here. We're going to tell you why you should buy in Calgary after that little difference. But again, this is why we like to change it up a little bit every so often, give people different content and different perspective. And this is your chance to ask us questions. And we're really excited about today because there was a great article that came out in the Globe and Mail, which basically just says everything we've been saying since 2019, which is fantastic. So let's start the show. Okay, just sharing my screen. Look at that niche, great. Him right up front there. Okay. So here we are. Who am I? I'm owner and broker record of Remax Wealth Builders Real Estate. Been selling real estate in Toronto for over 15 years. Number one Remax agent in Canada for an individual transactions in 2022. Number 11 Remax agent worldwide. 2022 inducted into Remax Hall of Fame. Award of the Remax Lifetime Achievement Award of 35. And award of the Remax Circle Legends Award at 40. But none of that is relevant. That's just my success as a realtor. But what I'm really proud of is my investment success. And that's what we like to teach the people that come on. And that's how I've turned a deposit, and Kyle's turned a deposit, and Niesh has turned out a deposit. But my deposit of $39,300, I've turned that into a $17 million portfolio, which includes 15 condos, a high park triplex, an apartment building in Hamilton. That's everything. Those are all investment properties. That's not including my principal residence. And that's everything here. And just that building we were just talking about, Riverside Square, there she is right there. That's the building that I was discussing. That I'm just getting right now, which is going to be $4,200 a month occupancy fee. But why we start with this? So I was complaining about a unit and the costs and overruns and everything like that on that. And if I were to sell it, I'd probably take a loss on it. But if I buy and hold, that's where you see how you build real wealth in real estate. So my portfolio, current market value, just over $17.3 million. But again, there's mortgages on all these properties. If I were to sell all these properties, I would not be left with 17 million. Most of that money would be going to the bank to pay off the mortgages. But in 30 years, all those mortgages be paid off, because the amortization period on those mortgages is 30 years. And who paid off those mortgages? Not me. The tenants living in the property every month, they pay me their rent, and that rent goes to cover the property tax, the maintenance fee on the property, and then the mortgage on the property. And then in 30 years, I may not have $17 million in the bank now if I were to sell every property, but in 30 years, if I sold every property, I'd have $42 million in the bank. Because I would have no mortgages on those properties. And that's how you build significant wealth, by buying and holding real estate. And we do this and we talk about this. We start every presentation with this because we want to enforce in people: buy real estate, hold it over time. That's how you build significant wealth. And speaking of building significant wealth and what people are relying on retirement, Kyle will talk to you more about that because of his previous experience working at the Lotto.
Yeah. And everyone, my name is Kyle DeVigi, and I did not start a career in real estate. Before that, I was actually the draws manager running Lotto 649 and Lotto Max. These are actual balls from draws that made people millionaires. But what I found during my time there was they actually did a survey and found that about 1/3 of Canadians were planning to fund their retirement by winning the lottery. This is crazy. The odds of winning the lottery, multi-millions to one. None of those people are actually going to be able to do it. So Alex actually convinced me to leave that job and to go into real estate investing full time and to start helping people actually build portfolios and to grow generational wealth by investing in real estate instead of gambling on their future.
Kyle,
and that's what I've done.
Kyle, can I interject? This is something we haven't brought up on a webinar before. Kyle's literal line to me, because he worked in the corporate world, and he said his soul was dying a little bit every day, just going into the corporate world. And by investing in real estate and now teaching other people to do that, does your soul die every day, Kyle? I don't think it does.
No, absolutely not. It's something that I'm very passionate about. And I come from a long line of teachers as well. Almost everyone in my family, was a teacher. So I think it comes very naturally to me. And that's where we're all about education. We don't want to sell anything to anyone. We want to give you the information you need to make a proper educated decision for you and your family. And I think we are really good at that.
Yeah.
So That's what, I've been doing for about the past 5 years, have been very successful. This year alone, I've helped over 170 people from across Canada to invest in pre-construction properties in Calgary. That's just me. That's not even our team. So it shows you how passionate and how successful we are in this. And like Alex said, we put our money where our mouth is as well. I've personally invested in real estate in the GTA, but also in Calgary as well. Because, hey, I want to make money. I'm going to the areas where I think I can get the biggest return. And, that's why I invested in Calgary. That's why I'm continuing to invest in Calgary as well. And this is my portfolio. I've got 6 properties right now, and I'm continuing to grow that. Most of these were bought when I had that career, that job, not as a real estate investor. And it goes to show you that anyone can do this. It takes time, though. I didn't buy these all in 1 year. It took multiple years, nearly a decade for me to get to this point. But anyone can do it. Anyone can become a condo millionaire. All it takes is one property and time.
Yeah. And Kyle's sane. Sane people do what he does. Not you don't need to do
Well,
what
I'm
I do.
also very risk averse too. So, buying that first property, I nearly had a heart attack doing it. But it gets easier and easier because you believe in it. You see the proof out there and you see the wealth that you're building. And we'll get into that more later. But, I'm a sole believer now in investing in real estate for the long term is the way to build wealth.
Niesh. Niesh also from the
Hi.
corporate world.
Yeah, I am from the corporate world. Used to be from the corporate world. Anyways, I think I'm a balance between the open to risk like Alex is, the insane version, and the averse to risk that Kyle is. I'm somewhere in the middle. I kind of straddle that line. So I've been a realtor since late 2020 and found a ton of success in my first few years with pre-construction and in the resale world. When it comes to my real estate investment journey, I bought my first property in 2006 when things were relatively still affordable here in Toronto. And as of today, I'm the landlord and owner of 6 properties in total, and also have a financial stake in 3 others. 2 of those properties are in the Greater Toronto area, and my last 7 investments have been in Calgary. So that's, I think, where the insanity part comes in when we talk about being open to risk. Since 2022, when I really got into selling real estate in Calgary, I've sold now probably closer to about 180 properties in the last year and a bit, and also have a good resale business here in Toronto. Prior to getting into real estate, I worked for a company called Versent Corporation. We were a entertainment company. And when the world dealt with COVID in mid-2020, I knew that our business wouldn't last. So thankfully, I had started my journey into getting my real estate license. And inevitably, when our company dissolved in October of 2020, I actually had my license in hand the next week in the first week of November. So timing was fantastic. But the reason I want to bring this point up about my previous career is that I had invested a ton of money into my retirement through the programs offered by my company. And along with that, I had high hopes for the Canada Pension Plan to take care of me in my retirement years. Now, just like many people dealt with over the last 2 to 3 years, none of that stuff is dependable anymore. I can't count on my company contributions because my company doesn't exist anymore. And as we are now seeing, Canada has a larger population that's in their retirement years, folks. So that's between the ages of 60 and 85. And I'm going to cap it at 85 because that's the average lifespan for your Canadians. That number, that population number, makes up for over 27% of Canada's population. That's about just over 11 million people, and we're at 40 million people here in Canada. The population that's within their highest income earning years, which would be 35 to 55, is 9.8%. So that number of people is smaller than the people that are in their retirement years. So what this really means is, who knows what we can depend on in terms of the government helping us during our retirement years. For that reason, I knew that I had to take my retirement into my own hands and started to invest in real estate to make that possible, not just for myself, because I am an immigrant, but my son and of course, generationally down the road, I want to leave a legacy where they have something that they can depend on that isn't necessarily the government. And in the next slide, we can take a look at the portfolio that I've been able to build. So my first two, 2006 and 2017, those are GTA properties, but all the other ones that you can see are purchased or I've been able to invest within the last 2 years. And all of those properties are out in Calgary, and just applying a very conservative 3% year-over-year appreciation, you can see where that portfolio will grow to. And I know Alex will talk about this in a bit more detail, but transparency is key, and that is what we have. And we truly believe in the Calgary market. That's why we've invested our hard-earned money there ourselves.
And just in 2022 alone, we helped over 350 people from across Canada invest in Calgary. We're very passionate about that. And it's actually more, we've invested in 50 in Calgary pre-construction units there. Now, you see our portfolios, they're large numbers, but anyone can get there, as Kyle said. And the key thing is and something that I believe in, because so something I read a lot about is when I read in the paper and talks about a retiree in their 80s, an elderly individual that is struggling to live in a basement apartment because they sold their house 15 years ago, and then they were using those funds to fund their retirement. Cost of living goes up, and what they've given up control of their future when they sold that house. You always want to maintain your control of your future. Now, our biggest assets are our houses that we live in, but if you utilize the equity that's in those homes, you'll be far better off in the future. So instead of having one property going up in value that you pay off, imagine having 2 properties or 3 properties or 4 properties. And we did the math. For each $350,000 condo, that will represent over $24,000 of annual income in your retirement years. And that's adjusted for inflation. That's in today's purchasing power. So let me show that to everyone here. So again, our numbers look big with our portfolios, $17 million portfolios, $5 million portfolios for these guys in current market value. But even if you start with a $1 million real estate portfolio, which may seem like a lot, but that's basically $350,000 condos, you will be able to pay yourself an income, again, with today's purchasing power. So I've adjusted for inflation, with today's purchasing power of $70,000 per year in 30 years. And that, what you've done is you've built your pension. You've built a pension that you could pay yourself $70,000 a year on with that portfolio. Now, if you want to adjust that for inflation and for inflation in future years, and you want to have that generational wealth component, so instead of paying yourself 5%, pay yourself 3% per year on the value of that portfolio. So you pay yourself $42,000 a year. You've built your own pension fund. If you get up to $2 million, you can do $140,000 and $84,000. And again, you control your own future. If your company goes bankrupt with your job, it doesn't matter, because you own the hard asset, you own the real estate. You're providing a roof over someone's head. And why we feel so passionate about Calgary is that's where the affordability component comes in. When Kyle and I started investing Niche's wealth with his first properties back in the day, it was affordable to invest in Toronto. You could buy a condo. Again, the first properties that Kyle and I bought for that $39,000 deposit, we were buying in the mid to high 200,000s, and we could show positive cash flow. I started this whole thing off on a rant about occupancy fees. I'm going to be negative $1,400 a month. That's like renting COVID, like $1,400 a month. Like if I go back and look at our analysis, that's probably the rent we projected in 2012, what we were going to get for our 1 bedrooms and 1 in 10 units. So it's not affordable to invest in Toronto unless you're wealthy. It's a wealthy person's game right now, but that mom and pop that's really trying to get by, set themselves something up for themselves, set something up for the future. And we do, Niesh and I did a webinar on, doing that generational wealth, where are you going to invest? And that's where our sights turned to Calgary. And I'm going to stop this share. So we do this presentation every week, but this amazing article came out in Globe and Mail, and it really summarizes a lot of the stuff we've been talking about. And I'm going to go over that article with everyone here because I didn't write it. Someone else wrote it. And that's why I want to go over that. So let me just change the share screen. So let's go to that article. Here we go. Share the screen. Let's go right up here. Okay, so everyone sees here. So this article came out on October 2nd. Headline, as Canada's population booms, Alberta is growing at the fastest pace in the country. And that's what we've always talked about. So in our presentations, we show that Calgary has had positive population growth over the last 3 years. We also show that Alberta is scheduled to lead Canada in population growth over the next 2 decades. And in the next 2 decades, it's going to grow by 48%. Ontario during that same period is going to grow by 24%. And then Calgary is going to outsize that growth. It's going to grow by 62.5%. It's the economic and population capital of Alberta. And that makes sense that the population growth is going to be oversized there. They're going to add 1 million people in the next 20 years. So when we look at right here, Statistics Canada's mid-year update of population demographics released this week showed that as the Canadian population booms, Alberta is the boomingest place of all. And we've been saying this for years. Focus on Alberta. That's where the growth is going to be. In the 12 months ended July 1st, the province population surged 4%, the fastest pace in the country. We've said this. The growth was juiced by a massive 106 Canadians who moved to Alberta from other provinces. So I'm going to jump in and bring Kyle in here for a second. So when we started having these conversations in 2019 with people, we showed them it was a good opportunity, and it was just strictly investors. Now, Kyle, what are those calls like? Who are you talking to? Who wants to buy in Calgary?
Yeah, probably about 1 in 5 of my phone calls, about 20% of people are actually considering moving to Calgary themselves personally. And everyone nowadays seems to know someone that has already moved there. So it's something that we're seeing. It's something that's probably accelerating. They just had the record number of interprovincial migration from Ontario to Alberta. So this is happening. We're seeing this firsthand.
And it's not covered in this article. I didn't see the numbers in the article, but Ontario actually lost 15,000 people. And that is a first in that interprovincial in a significant amount of time. Whereas Alberta saw a net interprovincial gain of 56,000 people. So that's already Canadians living in Canada, leaving other provinces, moving there. Plus you have the international immigration as well. So that's where you see leading Canada 4%. Even for Alberta, whose oil and gas business has long attracted workers from other provinces, that's a spectacular number. The net migration figure is the biggest on record for any province in 52 years of data. Only once in 80-81 have more Canadians moved to a province in a single year. And guys, the messaging is just starting. This isn't going to stop. I can say, as Kyle said, he has calls with people. I have clients leaving. I have properties for sale. People are leaving Ontario. People are leaving Toronto, and they're moving to Alberta, and they're moving to Calgary. Not only that, do they have population growth? They will also lead Canada in economic growth. A recent outlook from the economists at TD Bank estimated that the province's gross domestic product will expand to a healthy 2.3% this year, far stronger than the meek 1.2% forecast for the country as a whole. In the past 12 months, Alberta's employment is up 4.1%, far above the national pace of 2.5%. While the Canadian labor market has slowed in recent months, the province has added 44,000 net new jobs since April, generating nearly 60% of the country's job growth all by itself. Population growth, the jobs are there for people. Economic growth is there. It helps that the rumors of the death of the oil and gas industry have been greatly exaggerated. So many times we've had the conversation with people, what about the oil and gas industry? Which is, it's great because it's driving surplus revenues to Alberta, and they're running surpluses in the provinces for their budget. But that's not it. And we've told people in our webinars that it's not like they're hiring new people in the oil and gas industry. There's no new oil wells being explored. There's no new massive oil sand productions being done. This boom is sustainable. Here we have Brad Perry, head of Calgary Economic Development, said the current population boom isn't strictly oil driven of previous decades. Now you're seeing them coming for a whole bunch of other industries. Calgary alone added 42,000 new residents in this past year. That's 42,000 new residents. Guess what? Those 42,000 people, they need roofs over heads. You want to be investing where the population growth is the greatest, and that's where we see Calgary being. Why? And a big part of that is lifestyle component. It's being able to afford a home. As of August, the average price of a house in Alberta was $440,000, compared with $956,000 in British Columbia, $832,000 in Ontario. And again, those are the provincial numbers. There are many different places in British Columbia and Ontario, right? Where Calgary is a massive metropolitan area. Average one-bedroom rent for apartment was under $1,300 a month in August, compared with over $2,600 on Toronto and nearly $3,000 in Vancouver, according to rentals.ca. And the thing is, we're focused on strictly on Calgary because that's where we see the new tech startups. We are seeing other industrial industries opening up. And we will go, when we go back to the slideshow, we'll go right to the companies in that slideshow and show all the companies that are opening up in Calgary.
In this article, Alex is talking about Alberta, right? Generally. Yeah. Now, what we're seeing is Calgary is by far benefiting the most from this versus other cities like Edmonton or Red Deer. They are not nearly having the same benefit. Most of these people are going to Calgary, and that's what's putting stress on the local housing market there, both on the rental side and on the resale side. It's not happening nearly as much in those other cities in Alberta. So just wanted to call that out.
No, I appreciate that. That is exactly the point that we want to get across. And that's why we invest in Calgary. The cost of one-bedroom rental in Calgary, here we go perfectly, with a 20% in the past year, we're seeing rents jump. The city is one of the few genuinely hot home sale markets in the country, with resales up 25% year over year and prices up 7.3%. Articles in the Toronto Star today and the Globe and Mail. Toronto has officially entered a buyer's market first time since the financial crisis. And I'll tell you, that's true. that isn't a media grabbing headline. No, we are in a buyer's market. We're on the ground here. Niesh and I were talking about this in our weekly sales meeting. No, we're firmly, it's here in the Toronto market. Because affordability. In terms of keeping up with housing demand over the long term, Calgary is focused on turning a major economic curse of the past few years into virtue. The city's sea of downtown office tower emptied out before COVID-19 pandemic, casualty of the collapse of the oil market in 2015, 2016. So its revitalization is well ahead any other cities because they've been dealing with this for over a decade. They have experience in vacancy in offices, and some of those old office towers are converting those into residential units. You also have affordable office space, which startups are taking advantage of. And when you look at office rental space in Calgary versus office rental space in Vancouver and Toronto, Toronto's double and Vancouver's triple the cost of office space. But in terms of further expanding and diversify Calgary's economy, Mr. Perry is more than happy with the flood of newcomers for the city's growth industries in clean energy and AG tech and transportation and logistics. He believes the fast-growing labor supply of 3.9% in the past year will accelerate those businesses' growth. From an economic standpoint, we don't see it as a negative because, again, even where we are, there's still labor constraints. And if the labor is moving to a specific area, you're going to see the industries move to that area as well. So I loved this article, and that's why we wanted to address it in today's webinar. Because again, guys, I didn't write it. And this is Globe and Mail picking this article up and highlighting everything we've been talking about for now 4 years. So I'm going to jump back into our presentation. And we're going to jump through a whole bunch of slides. Again, if you guys want to, these are all on our YouTube page, but also on our webpage. So you can always look at these as well. But basically, all the stuff that I'm going over, we have talked about. So now I do want to get into the specific jobs and to give an idea of that employment growth and how that diversification is happening. We already talked about the low cost office space. So let's get into the unicorns on the presentation. Kyle, I'll let you talk about these.
Yeah. And this is just a demonstration of how Calgary is diversifying away from oil and gas, and most importantly, into tech. That's going to be the future driving a lot of the economy forward. AI has been the biggest topic lately, and companies are having huge valuations based on this. Now, not necessarily related to AI, but still within the tech industry, you've had several unicorns, billion-dollar valuation companies coming out of Calgary, like Neo Financial. They're in different shopping malls, even trying to sign people up for their financial products. You have a lot of pharmaceutical companies, Benevity. These are big companies now. And what's nice to see is when the founders of these companies, hit that billion-dollar status, when they come into money, they tend to like to help their friends, their partners in other businesses. And Alex, if you move to the next slide, there's been a lot of startups coming into Calgary. There's over 400 in the city now, and you're seeing that more and more. But not just the startups, also the big companies, the big boys, huge multinational companies. Amazon, they tripled down in Calgary. They have their regular distribution hub. They set up the first bulky warehouse in Canada, in Calgary, and they're setting up Amazon Web Services, only the second location in Canada. The other one's in Montreal. You're talking hundreds, if not thousands of jobs and multi-billions of dollars of investment. This is what gets me excited, is when you have tons of money coming into an area and jobs. That ultimately results in more people moving there and ultimately higher prices because of the extra demand. But also like TELUS, setting up, they built a brand new headquarters in downtown Calgary, 60-story building. They're investing billions into Alberta. WestJet just made Calgary their hub for all of their international flights. There's only 4 international airports in Canada. Calgary is now one of those. So again, it gets me excited about the city. Alex, next slide. Not related to tech, not related to oil and gas, but to Havilland. They're an aircraft manufacturing company, primarily doing water bombers and workplanes. They're actually based out of Toronto today. Their operations are in Downsview. That land has been sold. They need to get out of there, need to relocate, and they chose Calgary, just a little bit east of the city. They're setting up an entirely new airfield. This is going to be about 1,500 acres dedicated to a new landing strip, new aircraft manufacturing facility, heck, even a new university, or not university, but education facility, even a museum as well, general office. You're talking 1,500 good paying jobs that are being relocated to Calgary. So anything on the east side of Calgary is really going to overly benefit from them moving operations there. But also into more of the tech scene, you have Emphasis, SideTrade. These are big companies. The first 2 are big Indian companies, tech companies that are setting up operations in Calgary. And what gets me excited is they're increasing the size and footprint of their operations there. They've seen how successful it's been. So they're doubling down and they're continuing to grow in Calgary. And then, some of the namesakes in Canada, the big banks, TD, RBC, even IBM, setting up operations there, innovation hubs, wealth centers where they want to be training staff. And the majority of these companies are referencing the highly educated workforce there in a lot of the STEM fields. So mathematics, science, technology. So there's a lot of really educated people there that they can easily hire for the jobs that they need.
So we've already seen this actually happen in the States, and that's why we're so confident that's going to continue happening here in Canada. So we saw a migration of companies away from California and start moving into Texas. And we analyzed, why were they leaving California? Well, first of all, they were fleeing high taxes. When you look at Alberta, Alberta has the lowest corporate tax rate in Canada. There's no land transfer tax or development charges when they're building. There's no provincial sales tax. So by far, the best tax jurisdiction in Canada is Alberta. That's one check mark. Now, number 2, companies leaving California because of expensive housing. Their employees just can't afford to live there. Going back to that, Calgary is the second lowest cost of living out of all major Canadian cities and ninth in North America, one of the few affordable cities in Canada. Limited red tape for development in Alberta, and then government regulations committed to growing the economy, pro-business regulations, no rent control, the Alberta Enterprise Corp for Innovation, a $10 billion stimulus package since COVID had not allowed them to have those lowest corporate tax rates in Canada. And with that backbone of the economy, that oil and gas, that's going to continue to be there, that allows them to continue to diversify and make it that prosperous space for other industries to move in and to operate. It's that pro-investment mentality, no rent control, no foreign buyer tax, no land transfer tax, no provincial sales tax, no development charges, $10 billion stimulus package, including reducing corporate taxes and just highlighting on no rent control. It's a pro-landlord province because it's pro-business. So not only no rent control, you can have fixed term leases. So at the end of 1 year, you can tell your tenant to leave. Unlike here in Ontario, when you rent your unit out, there's no way for you to get that tenant out other than if you were to move into the property yourself. And if you owned it in a corporation, then there's zero ways to get that tenant out of the property. So it's a very favorable institution there. On top of that, let's say your tenant stops paying your rent, or you have a conflict with your tenant, 8 months at least here to resolve that. Your tenant's going to be out in 2 to 3 weeks in Alberta. They move much more quicker. And again, it's a favorable landlord environment to be in. So speaking
Alex,
of current opportunity, yeah, go ahead, Niesh.
Just before we do that, just want to touch on the landlord and tenant scenario that you articulated earlier.
Mhm.
So I'm living this right now, or I did live it in a positive way. I was able to increase my rent when my tenant renewed their lease by over 30%. I think in Ontario, the government only allows a 2.5% increase. Now that 30% increase that I was able to apply, I was still able to secure that rent for lower than the going market rent for my property in that same area. And my tenants, because they're paid well, they have good jobs, it wasn't a big deal to them. It wasn't an argument. It wasn't a conversation. They were like, okay, yeah, we understand. And it was as simple as that. Now, that conversation would go sideways, I would say, if you try to have that anywhere else. So again, speaking to the rent control issues, the lack of rent control and how pro-investor and business Alberta is, you're able to see your dollar go much further out west than I believe anywhere else.
Okay, and here are the current opportunities, and then Niesh, to let you know the next slide, because it's a new slide. I do talk about the brand new development that's launching next week, but Niesh, I'll let you talk about these current opportunities.
Yeah, fantastic. So we like to work with developers that are reputable and that have a good foundation, and we work with one that is in Calgary itself. And as a result of our relationship with them, we have access to pretty much all different property types, from low-rise condos all the way to single-family homes that even allow you to add a legal basement suite to double your rental income on that property. Our current condos are starting as low as, I think, $320,000. It's a brand new project called Myne Condos, which we'll talk about. It has phenomenal incentives, a 2-year rental guarantee, free property management, free locker, free parking, and it's going to be closing somewhere between 2028 and maybe even pushing into 2029. So it gives a good appreciation window. We have a downtown product, which is fantastic. It's going to be one of the focal highlights of Calgary's skyline. It's called Imperial Condos, also closing in 2028, and has a phenomenal incentive package and just unbelievable benefits to any investor that's looking into the downtown space. Our townhomes, we have a fantastic 4-bedroom, 3-bathroom option in the Northeast, and it's under $550,000, also with the 2-year rental guarantee. The majority of the properties that we have are a 10% deposit structure. And then getting into the freehold space, we have duplexes, freehold townhomes, and fully detached properties that are all under $700,000. And I actually want to highlight that under $700,000 because today's going rate for a single family home resale, which it's a combination of older, newer properties, is $730,000. So we are now selling pre-construction properties that will appreciate and will be worth well more than what you're paying for today in the future, that are going to cost you less than if you were to buy it on the resale market today. So not often does that happen. I think very rarely does that happen, and we're excited to share some of those in more detail with you as well.
And our latest development, this is launching in the popular northeast section of Calgary. This is launching October 10th. So Niesh, I'll let you take this as well. This is the building here, and here's what we're looking at for the pricing for those. And Niesh, why don't you talk about why the northeast is the best?
Yeah, and again, I'm putting my money where my mouth is. 4 out of my 7 investment properties in Calgary are in the Northeast. And I think that the biggest reason why is you can get in there for a good price point, but you also have a tremendous appreciation ceiling. We're seeing the Northeast quadrant, it's growing at the fastest rate when compared to all other areas of Calgary. And this directly reflects not only the property values year over year, but also what you're going to be able to secure in terms of rent. And that really helps from an investment standpoint, because you're looking at your bottom line. Myne Condos, it's going to be a combination of two buildings, just over 200 units in total. We have 1 bedroom that actually start, I think, in the $320,000 range. That's the last number that I saw. They all come with parking and lockers. You can get 2-bedroom units for under $400,000, and then the 3-bedroom, 2-bathroom units, which are ideal for families, are in that low $400,000 range. There's a phenomenal deposit structure. The 10% is paid down over 1 year, and you're looking at a closing probably in 2027, 2028. And again, this allows that appreciation to happen. You're looking at how quickly the Northeast is growing. These prices, man, I think we are going to blow them out of the water early next year. So secure a unit here while you can. We have access to all 200 units, and would be happy to talk to each and every one of you one-on-one if you have more questions about the area and just the project in general.
And then one final slide, and then we'll open up to Q&A, but just showing people the growth. So again, we to contrast this with the Toronto market, where we're entering buyer's territory, you're still in a seller's market in Alberta, and you're seeing that 10% year-over-year growth in single-family homes, 16% year-over-year growth for townhomes, 14% for condos. We're seeing rents go through the roof, and that growth is continuing to go. And remember, this is all at elevated interest rates. So just imagine what's going to happen when interest rates start going down. So you still have room to move when those rates come down. And that's really going to lead to another bump in prices in the Calgary market. So
Alex, just one very quick point. Can we jump back to the slide? Yeah, just
go ahead.
Just get back to that slide one more time. So you will see in other markets, you will see increases, moderate increases, under 5% from the last calculation that I looked for September numbers. These are October, September numbers are even better. But what's really encouraging about all the increases that we're seeing across all the different property types is that this is happening as sales are reaching record highs. In the last 12 months, Calgary has seen a 28% increase in year-over-year sales volume. So the volume of sales are going up, but also the prices are going up. Whereas in other markets, there's a negative effect because there isn't a ton of supply, because a lot of people are taking their properties off the market, or properties are staying on the market for too long. You're seeing slight increases. In Calgary, it's the opposite. You're seeing the graph going from bottom left to top right in both areas, in number of sales, but also in terms of what the properties are being sold for.
Yeah. And that's us. Alex, Kyle, Niesh, if you have any questions, please reach out to us. You'll also have our contact details in the email that goes out. We did record this, so you will be able to re-watch this. You'll be able to book calls if you have detailed questions or you want to book a consultation. But what we're going to do, we'll open up the floor for Q&A for 5 minutes. I'm going to stop the share here now. If you do have any questions, you can ask those questions in the Q&A box down below. Happy to answer any questions. But again, if you do want to book a one-on-one call, you have the opportunity to do that. We will, you'll have that information sent out to you in a recap email. Those recap emails usually go out a day after. Just have to edit the video and everything like that. So if we don't have any questions, I don't see any questions in the Q&A. Thank you everyone for coming online. We see great growth and potential in the future. So if you're an existing investor, there's good times ahead. And if you haven't invested, there's still a long runway to go in Calgary because prices were suppressed so long because the oil market fell in 2015, 2016, and Calgary's way ahead of any other jurisdiction in Canada because as those jurisdictions were going like this, Calgary was going like this, and now they're just on the uptick. So we have a long runway of catch up that we're going to be playing. And as I said earlier, we're seeing price increases in this elevated interest rate environment. So just imagine what happens when interest rates start going down in that market. So thank you everyone for coming online. Again, you'll have a recap email going out to you, and see everyone later. Bye.